Mastermind. We're back for our monthly Q&A. This is a special edition because we have a very exciting announcement. Actually, haven't done this. We usually do this like the first week of the month, but we actually weren't able to do it this month or last week because we've been so busy putting this offer together for you guys, and so we pushed back this Q&A that we typically do to this week, and so apologies for that. But to make up for it, I guess I'm glad to tell you guys that for those of you that follow us, you probably maybe already know this, but if you've been under a rock, or just kidding, if you've been busy with school and you don't really know, or you haven't heard, Wall Street Mastermind, for the first time ever, we've started offering a money back guarantee. Okay. And so what the money back guarantee is basically, if you work with us to get into investment banking, like you hire us to help you with recruiting, and for some reason you don't end up getting the offer, then we will actually refund you all of your money that you pay us. Okay, so we'll give you a full refund. The only caveat is that you have to do the work that we ask you to do. Right? Obviously, if you come into our program, there's going to be a lot of stuff that we're going to be doing together. We're going to be working on your resume, your cover letter, your LinkedIn profile. We're going to be working on your behavioral interviews. You're going to be working on your technical interviews. We're going to teach you how to network. You're going to have to go out and actually talk to bankers. And so nothing crazy, right? But these are just all like standard things that you would have to do anyway if you were serious about recruiting for investment banking. And we're just going to guide you through that process. Okay. And so if you do everything that we ask you to do, and at the end of this process, you still don't get into investment banking, or something comparable. Like, some people want to recruit for private equity, right? Or hedge funds, or, sales and trading, or equity research. But anyway, like most people, they want to get into investment banking. If you don't get into one of these highly lucrative, high paying, prestigious, Wall Street jobs, then we'll give you back every single cent of your investment. Okay. Because the only reason, in our experience, and the reason why I'm able to make such a bold offer, you're not going to find this type of offer anywhere else. Like, there are a lot of companies out there that try to help people break into investment banking, right? There are other service providers, there are other products that you can pay for, financial modeling courses, interview guides, like whatever, you name it, right? But you're not going to find anyone else that is going to offer this type of guarantee, because it's really, really hard to break into investment banking, right? Like, if you look at the acceptance rate of the top investment banks out there, it's anywhere from 1% to 3%, right? Like Goldman Sachs, they probably have based on publicly available information, back in 2019, for their summer 2019 class, they had over 28,000 applicants, and they only had less than 500 spots, right? So if you do the math, that's about a 1.8% acceptance rate, right? If you look at JP Morgan, the latest publicly available information on their acceptance rate is from the summer 2021 class, which is like the most recent class. They had 50,000 applications for investment banking, and they accepted 400 people, right? And then if you look at even like a slightly, lower tiered bank, it's not low, like Jefferies is a great bank, right? But it's middle market, right? It's not a bulge bracket bank like a Goldman Sachs or a JP Morgan. So even Jefferies, which is, slightly easier to get into because it's middle market, still not easy though. Their acceptance rate for summer 2020 was 3.5%. Okay. And so the point being, like, these are institutions that have a lower acceptance rate than even like the Harvards and Yales and Princetons of the world, right? Like, if you try to break into Ivy League school, like even Harvard accepts 5 to 6% of the applicants every year, right? So it's extremely difficult. And so no one out there is going to like offer to guarantee you that you're going to get a job like this, or else they'll give you all your money back, right? So it's a crazy offer. But The reason why we're comfortable making this type of offer is because we've been doing this for the last 3.5 years, right? And we've worked with over 450 students at this point. A lot of them have finished recruiting. Some of them are still going through it, right? So we don't count the people that are still going through it. But like if we went back as part of this launch, we went back and dug into the data because we want to make all of our major business decisions based on data. And this is a major decision, right? Like changing our offer to include a money back guarantee, it's a major decision. And so we dug into the data. We looked at all of our clients that we've worked with. And then so for the last 3 recruiting classes, so I'm talking about the class of 2020, class of 2021, and the class of 2022, we calculated it was like overall blended, it was like a 92% acceptance rate into investment banking. Okay. Now, class of 2022 is not done yet because some of them are still recruiting as seniors right now. And then so that number can still change. But like, even class of 2020, I think it was like 92 and 93%. I won't say it was 93%. Class of 2021, which was the year that was affected by COVID, it dipped a little bit. And even then, we only dipped down to 89%, right? And in the class of 2022, which is the current class that's still recruiting, we're back up to 96. Although, let's say even if some of the people that are still recruiting, if they end up not getting an offer, that number might come down a little bit, but I'm very confident that it'll still stay above the 90% mark, right? And then so we really looked at like, okay, that's a great percentage. Like, I don't mind having to, refund less than 10% of our clients what they pay us, especially if they don't end up getting a job, right? Now, the other thing though is into why the small percent, even though it's less than 10%, and that's like a number we're very proud of, why do those people not get a job, right? And in almost all instances of people not getting jobs, we found that is actually because they just didn't do the work. Like for whatever reason, they came to the program and they didn't do the work. Maybe they thought it was too much work, or I don't know, like investment banking recruiting is too hard. Like, no one's going to sit here and promise you that investment banking is going to be a walk in the park. Right? I'm not here to tell you that, oh, it's not going to require work. All you have to do is pay us money and you're going to get this job. Like, that's not how it works. You're still going to have to work really, really hard, right? But like, for the same amount of effort that you're putting in, we are guaranteeing that you at least have something to show for it, versus a lot of people work really, really hard to try to break into investment banking and then they still end up not getting in, right? Or like, even if you would have gotten in, like we're basically promising you that we'll get you an even better offer than what you could get on your own, right? And so that's our promise, right? Like basically in our mind, as long as you do the work, like if everyone that came in the program did the work, our success rate would actually be a lot closer to 100%, right? I mean, it wouldn't be 100%. It'll never be 100%. Like, we're not perfect, and there's always going to be variables outside of our control. But the fact of the matter is, investment banking recruiting is hard. It's a lot of work, but it's not rocket science. Like there is a formula to it. There is like a systematic approach that you can apply to the recruiting process where, there are certain boxes you need to check. And if you're able to check all of those boxes, then you should be able to break into investment banking, right? And so unfortunately, like they just don't teach this stuff in school, right? Like you guys all pay probably 6 figures to go to college, and for whatever reason, they're not teaching you the things that you need to know to actually get the jobs that you want. And so that's why, like, we're really here to supplement that. We're here to basically be an add-on to your education, to like all the money you've already invested into your college tuition or into your master's degree, or maybe your parents have invested on your behalf, like making sure that you get the best ROI on that investment, right? What is the ROI on your on the investment you made into your education? It's like your salary. It's like how much money you're going to make after you graduate, right? Like most college grads, like the average college grad in the United States today graduates with a $50,000 per year salary. Like that's crap. Like, excuse my language, but that's total garbage. Like, especially in this day and age, like you cannot survive on $50,000, especially if you want to live in, some of the more glamorous cities. Like if you want to live in New York, you want to live in San Francisco, like making $50,000 a year means you're like basically low income. Okay. And so like instead of paying 100 to 150 to 200 plus $1,000 to go to college, I mean, some people they go to Ivy League schools, private schools, and it costs them $250,000 for 4 years, and then graduating with a $50,000 per year job, or graduating with a bunch of student debt because you have to borrow money to go to school. Instead of that, and then you spend the rest of your career paying off those student loans. Like I know people that spend 20, 30, 40 years paying off their student loans, which is ridiculous, right? Because they're already living paycheck to paycheck. They're not making that much money. And every month they got to take out a chunk of their paycheck to make the monthly payments on the student loans. This is like, that's just a horrible way to live, right? So instead of that, if you can graduate and break into investment banking, all the investment banks just raised their pay recently, right? That's the other good thing is that if you are able to get into a top tier bank, I'm talking like a Bulge bracket or elite boutique bank, and even some of the middle market banks like the Jefferies of the world, all of them have pretty much raised their pay so that now the base salary is anywhere from $100,000 to $120,000 a year. Okay, so that's just the base salary, right? And then a big part of your compensation in investment banking actually is also your bonus, right? Your bonus at the end of the year, which depending on the bank and depending on your performance, the average bonus is typically between 50 to 100% of your base salary, right? So the difference between 50 to 100 is like if you're a great analyst, you're top of your class, you get closer to 100%, right? And then if you're like, the worst analyst in your class, you're probably only getting closer to 50%. I say only, right? And so if you do the math, like let's just be conservative. Let's use the lower end of the range. Let's use the $100,000 a year for your base salary. That means that at 50 to 100% bonus, you're gonna make all in anywhere from $150,000 to $200,000 just in your first year out of school, right? So you compare that to what I just said about how much the average college grad is making today in the United States, which is $50,000. That means that if you can break into investment banking, you can be like the top, whatever, 1 to 3% of the applicant pool that's breaking into these banks. You'll make 3 to 4x what your friends are going to be making, even though they graduated the exact same time as you. I mean, just think about that. Like, that's why these jobs are so hard to get. That's why everyone wants these jobs, right? And that's just your first year. Like your second year, your pay goes up even more, right? And then after your 2 years in banking, like you can stay in banking if you want, make even more money, or you can leave and go do something else. Go to the buy side, go to private equity, go to hedge funds, go to venture capital, go work in tech, like go do whatever you want. Like I've done a lot of those things myself too. And like your pay just only goes up and up and up for the rest of your career, right? So that's the return on your investment, not just in Wall Street Mastermind, but like in your education in general, right? The reason why you or your parents spend so much money to send you to school is because it's an investment. It's like, why not just let you be a high school graduate? Because you're gonna have a crappy job, you're gonna have a low paying job, you're not gonna have a good life, right? So that's why you invest to go to college. So like again, we want to make Wall Street Mastermind the best investment that you ever make. A lot of our clients, even before this money back guarantee, already tell us that it's one of the best investments they've ever made in themselves. We have testimonies of people saying that all the time, but we're going one step further and removing the risk for you, right? Basically, as long as you do the work, we'll refund you if you don't get a job. Okay, so the upside is you graduate with $150,000 to $200,000 a year salary from working with us, or that's like if everything works out beautifully, right? Which most likely it will. Or in the downside case, worst case scenario, you're one of the unlucky few who doesn't get the job, and then you get your money back and you don't lose anything. And then like in the worst case scenario, you got some free professional development from us on how to recruit, and then you can take that and go and recruit for some other slightly easier, not even slightly, most jobs are way easier to get than banking, right? You could go recruit for some other job that's going to be easier to break into, and you didn't pay anything, right? Like all you really had to put in was your time and effort in that case, and which you're going to have to put in no matter what, right? So anyway, that's our thought process behind the money back guarantee. Again, this honestly in my mind is like an insanely good offer, like if you don't take me up on this offer, like then I really like I genuinely have nothing else for you. But also it's just like look at this like any other investment that you would make, right? Like you guys probably invest in stocks or I don't know, crypto. A lot of people want to invest in crypto these days. Like any investment you make, you're looking at the risk reward profile, right? Like you're not going to be right about every investment, but what you're trying to figure out is like if I'm right, what is the upside? Like how much money will I make from this investment if I'm right? And what's the probability of me being right? Right. And then if I'm wrong, how much would I lose? And what's the probability of me being wrong? And then like you're basically taking like the probability weighted risk versus reward, and you want the rewards to far outweigh the risk. Right. And the reward has always far outweighed the risk, when it comes to working with us. But like we're just making that equation even more lopsided by saying, well, now you have zero risk. There's literally zero risk. Like if you get any incremental improvement in your career from working with us, um, this would have been a good investment, right? So anyway, that's the spiel on the money back guarantee. I don't know if anyone has any questions, whether it's about our program and how it works, or about our money back guarantee, or about just investment banking recruiting in general. Like if you're not even here to hear about the money back guarantee, that's okay. If you're just here to ask me questions about how to break into investment banking, like you have questions about, I don't know, how to make your resume better, or how to network, or how to I don't know, interview better, or you have a technical question, whatever it may be, like feel free to ask in the comments, and I'll try to answer every single question that you guys have. Okay. So Renzo on Instagram has a question. He says, "Can you be from London and be a client?" Yeah, Renzo, absolutely, man. We've worked with people in Europe before too. In fact, if you go on our website, if you guys go to www.wallstreetmastermind.com slash just go to wallstreetmastermind.com. It's probably the easiest way. The street's abbreviated to ST. And then on the top, there's like a drop down says testimonials. And then you click on student interviews. You'll see like we've broken out all of our different case studies and whatnot into different categories. And there's like one category in there that says, if you're applying outside of the US. So if you go click on that, you'll hear from some students. Like these are actual interviews where people are on camera and talking about what it's like to recruit a Wall Street Mastermind for London offers. Like we have someone who just got an offer from JP Morgan in London recently. And then we had also another girl who goes to Sheffield, which is, I don't know what school you go to, but she goes to Sheffield, which is a total non-target school in Europe, and she got into Deutsche Bank, right? And so, anyway, like yeah, we can absolutely help you even if you're in London. That's not a problem. Andrew Bathiha asks, "Hey Sam, what are the pros and cons of boutique versus Bulge?" Yeah, Andrew, it's a good question. So in terms of boutique versus Bulge, first of all, they're both great, right? Like I consider both elite boutiques and bulge bracket banks to be tier one banks, right? Let's put it that way. And I would say like middle market banks are like tier two, and then everything after that is like there's all sorts of regional boutique banks from like tier three all the way down to tier 10, right? And so the variance is a lot greater there. But like when you're talking about bulge bracket and elite boutiques, like you're going to be working on really big deals, high profile deals, some of the best companies in the world. The size of the transactions are going to be big, like typically hundreds of millions of dollars at a minimum, sometimes billions or even tens of billions of dollars, right? And so the quality of the experience that you get is just going to be really good no matter what. I would say like the main differences in terms of pros and cons, like this is a matter of personal preference. It's not right or wrong, but if you go to an elite boutique, most elite boutiques are primarily focused on M&A advisory and also like some restructuring. Like some firms will do restructuring too, right? A lot of the elite boutiques. And so it's either M&A or restructuring. So they're not doing capital raises. They're not working on like IPOs. They're not working on debt deals. And so it's going to be like you're going to get a more narrow experience, which like might sound like a bad thing on the surface, but like some people actually prefer that, right? Especially like, depending on what you want to do after banking, right? A lot of like a lot of people, they say, oh, I want to do private equity, right? Like, so if you want to do private equity, like a lot of these buy side jobs, they really want you to have like a more technical skill set, right? And working on M&A deals and working on restructuring deals, you're going to get a much more technical skill set than if you were working on like a capital raise. Right? That's just how it is. Like the level of modeling that's involved is just more complex, right? And so I think I also personally think that M&A deals are more strategic, like in terms of like the strategic rationale behind it and the thought that goes into a transaction. I think it's more interesting than say um, like a capital raising deal, right? And so that's that's like one of the, I would say, one of the benefits for working at an elite boutique. I think the other benefit of working at an elite boutique is that they tend to pay higher than even the bulge bracket banks. Like for example, I said earlier, base salary is between 100 to 120. 120, that's Evercore, right? Evercore pays top of the street, and they're an elite boutique, right? Centerview is another elite boutique, and they pay a pretty fat like sign-on bonus. I'm pretty sure it's like $50,000 or something. So like when you add that in, like your first year, you're also making over 200K. And so like elite boutiques, because they make just as much on these deals as the bulge bracket banks, but they have a lot fewer mouths to feed, so to speak, right? Because there's less headcount. Therefore, like there's more money in the bonus pool to go around, and they can compensate better, right? And then like on the bulge bracket side, I would say like obviously if you prefer like a broader experience, like they have more industry groups, more product groups, you might get a more well-rounded experience if you think about it that way, right? Like when I work, like elite boutiques weren't a thing back in my days, right? Like they kind of came about starting in around like 2008 or so, which is like right when I started my banking career. But like when I worked at DB and I worked at MS, like I got to work on all types of different deals. I did IPOs, I did follow-ons, I did debt deals, I did converts, I did M&A deals. So I kind of got a taste of everything, right? And for some people, like that might be actually preferable, right? And then the other thing is obviously like, if you are just talking about like the Wall Street, like within Wall Street, everybody's gonna know who all these elite boutiques are. But like outside of Wall Street, I think most people don't really know who these elite boutiques are. Like if you go ask your mom and dad, they know who Evercore is or Centerview is, or even like your friends who are not interested in banking, like they probably have never heard of them, right? And then so like the halo effect of having that experience on your resume, depending on what you want to do after banking, might be different, right? Like if you have Goldman Sachs on your resume, you have Morgan Stanley on your resume, and then you end up, doing something outside the finance industry. I think like people are still going to, know what that is, and basically respect it more, right? And so those are like some of the trade-offs I would say, right? So hopefully that helps. Let me come back to some of these other questions. So there's a bunch of questions on Facebook and YouTube and LinkedIn. So let me get to these. So Manav Puri asks, is there a way to get into investment banking without an Ivy League degree? Yeah, like there absolutely is, Manav. Like people get in to banking from non-Ivy League schools all the time. Well, I don't say all the time, but like inside of our program all the time. Like we actually, as part of this exercise, when we went back and looked at the data around who's breaking into banking with our help, um, out of all of our successful students, about 45%, 45% of them go to a target school. So these are like either Ivy League schools or like top public schools that usually also have a business program, right? Like Michigan or Berkeley or UVA or UT, like with McCombs. And so like 45%, which is less than half, come from schools like that, and about 20% come from semi targets, and then about 35% actually come from non-targets. Okay, so like that's a significant percentage, right? Like if you lump in the semi-targets and non-targets, that's actually 55%, which is more than half, right? So it's absolutely possible. Is it harder? Yeah, absolutely. It's a lot harder, which is kind of where we come into the picture, right? Like it's our job to help you kind of level the playing field, right? And again, I don't know when you joined this call, but if you go to our website, if you go to, let me see if I can share this actually. Yeah, so if you go to our website, again, this is wallstreetmastermind.com/student interviews main page. Okay. You'll see like we've broken down like all the different case studies that we have by different categories, right? So like if you're a non-target school student, you can click here. If you go to a semi-target, target school, depending on like how good your GPA is, like a lot of our students actually don't have perfect GPAs, right? Like what year you are currently in school, any other challenges you might have, like maybe you're an international student, you need visa sponsorship, maybe you don't have any relevant finance experience right now, maybe you're applying outside the US, maybe you're a transfer student, whatever, right? And then so you can go click into these and actually like hear from a lot of our students who have been in the same boat as you, like maybe other students that also went to high schools, right? And you can talk about like how they were able to break into banking with our help, right? And so this website's loading really slowly right now, but anyway, you get the gist. Like I would encourage you to go to that page, okay? And then like you'll find the interviews, and these interviews are like pretty in depth. They're like 30 to 60 minutes each, right? And then, so we don't just like we really talk about how everything happens. Like Noah, he went to Drexel. He got an offer from Morgan Stanley, right? Luke, Santa Clara, he was the first guy from Santa Clara ever to break into Evercore, right? Ruxar goes to Baruch. She also got multiple offers, Jeffries, UBS, so on and so forth. And there's other like, more interviews down below. I'm not going to go through every single one of them, but you kind of get the point, right? Like it's absolutely possible. Like do not let that discourage you from pursuing investment banking if that is in fact like your dream job. Okay. And then I see you had another question here, which is, I'm 28 years old. Is it too late for me to get into the business? Yeah, I mean, I would say like it depends, right? Like there's no one size fits all answer here. 28 is definitely late, but I don't know anything else about you. I would say like typically if you're breaking into investment banking as a 28-year-old, you're probably breaking in at the associate level after you've gotten an MBA degree, ideally from a top program. Okay. And so like you can certainly do something like that. Not saying that's the only way. Like you might be able to break in without an MBA degree, but that's going to be more difficult. And again, it's really case by case. Like I would have to know a lot more. Like I would have to see your resume and understand like what you've been doing up to this point, and also it comes down to like what type of banks you're trying to break into. Like there's a lot of different variables, right? So if you have more questions about your specific situation, like feel free to. We don't have to talk about it right here, but feel free to just message me on LinkedIn, and I get a lot of messages on there, but I'll try to get back to you in a timely manner. Okay. Let me go to the next question. So Nicholas on YouTube asks, "Hey Sam, I just had a quick question about breaking the IB at the analyst level. Would you say your program is an affordable and more efficient alternative to breaking the IB than someone doing an MSF at a top school?" Yeah, I mean, Nicholas, like more affordable than an MSF. Yes, absolutely. Because I think like most MSFs, like it's a 1-year program, and you're probably paying anywhere from like $70,000 to $100,000 after all your living expenses and tuition and books and whatever else you need to pay for, right? So that's like really, really expensive. So we definitely don't charge anywhere close to that, right? And then not to mention again, we have a money back guarantee, and so like if you go to an MSF and you do that with the intention of breaking into investment banking, like they're not going to guarantee that you're going to get into investment banking. So if you pay like $100K for this degree, and then you end up not getting into investment banking, like you don't get that money back, right? And in terms of like more efficient, like yeah, like MSF, like you got to go for a year. If you work with us, like depending on the situation, it might only take a couple months. It could take a year. It could take longer. Like I don't know, but again, that's case by case. Like we never give one size fits all answers. Like we don't know anything about you, so we would have to like talk with you and learn more about your situation to be able to like give you a more accurate answer. But from like a cost standpoint, yeah, absolutely, I would say we're more affordable than an MSF, and most likely more efficient too. I would say like to go through our program, like most of our students to learn everything they need to learn, they're doing it in like 2 months or less, right? Like for us to teach them everything they have to know to then go out and like execute on what they need to execute on for recruiting. So hopefully that makes sense. But if you have more questions, feel free to ask. All right. Let me go to the next question here. Also on YouTube, Derek asked, "How much is the program?" Yeah, Derek. So this is a good question. So we have this. It's like one of the most common questions that we get all the time. So we have on our homepage, like you should go check it out. But the bottom line is like, as I've alluded to from my prior 2 or 3 answers to people's questions, like there's no one size fits all approach to breaking into investment banking. Like it really depends on who you are and what your situation is and how much help you need and what you need help with. And so like our approach is not like, hey, here's a PDF file, the same PDF file that we give everyone, or here's a financial modeling course that we recorded that we give to everybody, and then we just charge everyone like the same things. Like the one size fits all approach doesn't work, right? Like most people who do that, some people who do that do get in, but like the vast majority of people who do that don't actually break into investment banking because there's no personalization involved. And so in order for us to like actually give you an accurate quote, we would have to like speak with you first, right? This is why we also offer you guys the opportunity to book a free consultation with us so that you can tell us more about your situation. And then we can like, figure out together what it is that you need help with. And then also like, honestly, if you have like budgetary constraints and things like that, like then we would need to know that stuff too, so we could see if we can like put something together that will work for you, right? But ultimately, at the end of the day, like no matter what the package is that we end up customizing for you, what I can say, what I can be very upfront about is it's going to be more than like any of these cookie cutter resources that are out there, right? That you could also potentially use, right? Like if you just want to buy an interview guide, or if you just want to take like a financial modeling course, that's always going to be cheaper than what we're doing, because for us, like we're more of like a premium service where it's very hands-on, and it's like white glove treatment, and we're like with you every step of the way going through the entire recruiting process, right? Like that's the only way literally that we can have such a high success rate, right? And so it's up to you to decide, like, if you're looking for like just the cheapest thing, like we're not going to be that no matter what package we customize for. Like that's just straight up not possible for us to get the results that we get and charge people like $200 or something, right? Like think about that. Like everyone would just pay us $200 and everyone would like get these, $150,000, $200,000 jobs. Like something would be wrong, right? Like that's what the definition of like too good to be true, right? But like if you're looking for like the highest quality in terms of help, and you're looking for like the lowest risk in terms of like us being the only service that offers some money back guarantee, then I would say we might be a good fit, right? So, if that's something that you're interested in, like I would just encourage you to book a call with our team. And you can do that by going to www.wallstreetmastermind.com/apply. Street's abbreviated to ST, by the way. So it's wallstmastermind.com/apply. And then we can talk about it, see if it's a good fit. And honestly, like if you're not a good fit, or if we're not confident that we can get you the job, we'll straight up tell you, like, we don't think you should do the program. Because the last thing that we want to do is spend a bunch of time and effort working with you only to have to refund you at the end. Like that's like we'll just lose money by doing that. And so like we're not going to like mislead you, or we're not like one of those companies out there that will like say whatever they have to say to get you to work with us. Like that's not how we've structured the program, and that's not how we structured our business model. Like we're not incentivized to do that. We're incentivized to only help the people that we can actually help. And that doesn't mean that we only work with, students from Harvard with 4.0 GPAs and whatnot. Like that's why I showed you guys the website earlier. Like you see dozens and dozens of examples. And like I said, 35% of our students come from non-target schools, right? Like if you go to a target school, even better, right? You get an even better outcome. But like bottom line is, I would just encourage you to chat with our team. It's no pressure whatsoever. And if it's not a good fit, we'll tell you. All right. Let me go to the next question. Alicia asked, I wanted to ask if this program and the strategies in this program is also good. Okay. There's the second part of this question. I want to ask if this program and the strategy in this program is also good for asset management or equity research. I would say like for equity research, it can work. Like there's a lot of overlap. There's a lot of overlap with investment banking. Like I would say like everything you learn for investment banking. Let me rephrase. Whatever we teach you to help you break into investment banking will include everything you need to know for equity research and more. So what that means is like there's probably like certain parts of our training that you won't need to do if all you're doing is targeting equity research, but you're not going to be missing anything that's not already in the program, right? Now, asset management, I think, is like different, and so I wouldn't say it's as applicable. I think there are certain things that are so similar, like your application material, your networking best practices, how to answer behavioral questions. So like about 2/3 of the program will be applicable to asset management, but then like the technical interview, I think like would be different. Quite frankly, I think the banking technical interviews probably harder, but like the questions is just different, right? And we don't really cover asset management technical questions, and so I'll be 100% upfront about that. All right. Another question from Derek. For sophomores, when should I know my technicals by? Christmas time? Yeah, I mean, Derek, like honestly, I think Christmas time is a good goal. Like I would say in recent years, the elite boutique and bulge bracket banks, like the first wave of applications have opened up about halfway through sophomore year. Okay. And so like if you're targeting those like top tier banks and you want to be ready to go as soon as the application's open, because once you apply, you can get an interview basically at any moment, right? And so if you're fully ready by Christmas time, I would say like you're like that's like best case scenario, like you're rock solid for like all the opportunities out there. If you're like a little bit later than that, like it's not the end of the world. Doesn't mean that you won't get an offer, but like you may or may not miss out on some of the banks that open their applications on the earlier side. Okay, so honestly, like for those of you who are sophomores right now, it's November 9th. Like last year, the first wave of applications opened in January 15th. Okay, and so that's about 2 months away. But also, we know for the last 10 to 15 years, like the investment banking recruiting timeline has moved up earlier every single year, like slightly earlier every single year. And so, like this year, there's no guarantee that banks will wait until January 15th to open up their applications. But like RBC already opened up their application for summer 2023, in fact. And so, like, I would say, like, my estimate is, and this is just a best educated guess based on what we've seen in the last 3 to 4 years. My best educated guess is that for sophomores, like the junior summer application process will probably start up in earnest some point in the next 1 to 2 months. Okay, so like right now for all the sophomores that we're working with, like they're heads down, like basically doing everything they can to learn everything they need to learn before that starts. Right, so it's crunch time basically. All right. Ansh Doshi asks, how do you keep in touch / reconnect with people you've once connected with in the past, but haven't spoken to in the last 2 to 3 months? Yeah, I mean, so Ansh, like, we do teach this inside of our networking program, but we have like a template. You basically what you want to do is like you want to send a like check-in email or update email, I would say, where just to like touch base, quickly update the banker on what you've been up to since you last talked. Ideally, like, mention all the relevant things you've been doing. Maybe you did a certain internship, or you took a certain class, or participate in a case competition, or I don't know, you join a certain club, whatever, right? Like, I mean, update them on like what you've been doing to work on yourself as a candidate. And then also, like, more importantly, if they gave you some advice the last time when you first talked, which hopefully they did, if you asked the right questions, have you gone out and executed on whatever advice it is that they gave you, right? Because if you have, like, you definitely want to bring that in. You want to give them an update on what you've done. Like, I went out and did what you told me to do, and this was the result. Because when people give you feedback or give you advice, like honestly, 8 out of 10 times, people ask for advice and then they don't go and do anything about it, which is like really frustrating for the person giving advice. But like if you're one of the few who actually goes out and does something that people told you to do, and then you come back, you circle back, and you like tell them about it, then it's gonna make that person want to help you that much more, right? Because you actually listen and you actually do what they told you to do, right? So we'll definitely mention that if there's anything like that. And then, if you have any other questions for them, like I would include that in the email too, right? So that's kind of like the high level gist of it, right? And here's what I would hit on. And then like, just make sure to keep your email short and concise and to the point. Like, it might sound like I'm talking about a lot of stuff. Like, you don't want to you don't want to write like pages and pages. Like no one has time to read that, right? So again, if you end up working with us, like we can give you an exact template for how to structure your email and how long it should be and what are the sentences and all that. All right. Let me go to the next question. Luca asks, "Hi Sam, as a community college student, is there any way I can get a junior summer IB internship, or should I just concentrate on getting as good a job as possible in other industry and hoping I will be able to get into IB from MBA program?" Yeah. So, Luca, I don't know how long you've been on this live stream, but again, if you go back to that testimonial page that I showed earlier, we have also helped community college students break into banking before. It is possible. It is hard, because you are starting you're starting pretty late, right? And then so if you come here, like there's a transfer students category, right? Again, it's wallstreetmastermind.com/student interviews main page. So I encourage you to check that out. But yeah, it can absolutely be done. Typically, what's going to have to happen though is you're going to have to first transfer. You're not going to be able to recruit for banking from a community college. Okay, so you got to transfer to a 4-year school. The better the 4-year school, the easier it's going to be, right? And then the other challenge I would say for community college students is that usually like you don't transfer until junior year, right? Like you spend your first 2 years in community college and you spend your third and fourth year at the 4-year school. Some people I've seen transfer after just 1 year in community college. If you can do that at all, I will highly encourage it, just because again, like investment banking recruiting now, like it happens very early, right? And so like if you're recruiting for the junior summer internship, that process typically, at least for the big banks, it starts like halfway through sophomore year. So like that second half of sophomore year, and then going into like the first half of junior year, you have like kind of those two semesters plus the summer in between your sophomore and junior year. That's like the window for recruiting for the junior summer internship, right? So if you're not already at a 4-year school during that window, then it's going to be hard to recruit, right? And like if you go in as a junior, you can still catch the back half of that recruiting window, but typically the problem there is like you just got to the 4-year school. And so you also haven't really had any opportunity to build up your resume in any way, in any like material way, right? Like, because it's hard to get relevant internships and whatnot as a community college student. And so if you can transfer earlier, I would encourage you to do so. If you cannot, then another thing that, some community college transfers we've worked with have considered doing too, or have done, is once you go to the 4-year school, just delay graduation by a semester. So take 2.5 years, or even like if you take, depending on the school and what the academic rules are, what they'll allow you to do, like you can even maybe like take a semester off, right? And even go do like go find an internship and do that full time, or call it co-op or whatever. And then now you delay graduation to December instead of May. And what that does is that pushes you into the following recruiting class, in which case it's kind of the same thing as saying you transferred in as a sophomore, right? And so that will give you more time to then be able to recruit for the junior summer internship and so on and so forth. Otherwise, like, yeah, going to MBA is an option. Someone else mentioned an MSF earlier. You can do that too. Actually, like doing an MSF is basically kind of the same idea as delaying graduation by a semester, except like you just add on the MSF as like a 5th year, right? So you're going to school for 5 years instead of 4. And that, again, the purpose of that is to just buy you more time from a recruiting standpoint. So I would say like MBA is an option, but MBA is even like more expensive than an MSF, and it's even a bigger commitment because it's 2 years instead of 1. And typically you're not going to be able to get into top MBA unless you first work for a year or two first, right? And then like once you've worked for a couple years, and then you got to go back to school, and then like during those 2 years in a business school, like you're not working because it's a full-time program. Like sometimes it's kind of hard to manage that financially, right? So it could be easier to just like stay in school for an extra semester or an extra year if you're doing an MSF, and then go straight into work, right? So anyway, there are like a lot of different ways to kind of like break into banking, and there's different pros and cons. And if you want more advice on that, like again, I would just encourage you to book a call with us or something, or message me on LinkedIn, and happy to chat with you more about it. Okay. Let's go to the next questions. Let me come back over to Instagram for a second and show Instagram some love because haven't gotten. I know we're getting some questions here and haven't gotten to them. Swag D-Tag asked, how much is your program? Answered that question earlier already. Modern with luxury. Opinion on BAML credit and wholesale banking division. Had first round and currently a sophomore from a non-target. Honestly, I don't know much about wholesale banking. You know, like what I can tell you for sure is that it's not as good as investment banking in terms of pay and prestige and exit opportunities and all of those things, right? Now, BAM was obviously a great firm, but I'm not sure if you meant like this is your sophomore internship or junior internship. Like I would say if this is your sophomore summer internship, then hey, like that could be pretty solid, maybe. If this is your junior summer internship, then it's not investment banking, right? So I would say if you want to get into investment banking, I would try to find something that's more relevant to investment banking as opposed to wholesale banking. Okay. So that was Instagram. So let me come back over to YouTube. Nicholas again. I've noticed that some investment banks like HSBC, Deloitte Corporate Finance, Cowen, etc., offer 2-year investment banking programs aimed towards new graduates. Not sure what you mean by that. I mean, like all the banks, all the bulge bracket, elite boutique, and middle market banks. I mean, even regional boutique banks, like the analyst program, which is what's offered towards new grads, like that's typically a 2-year program, unless you're talking about like people who have already graduated for a few months and they're already out of school and they're still recruiting and they can recruit for those positions, in which case, like, yeah, I think I have seen a very small handful of banks that have started doing that. And I think like the reason why they might be doing that this year is because a lot of banks are understaffed right now. They need more people. A lot of banks underhired during COVID, and then they didn't expect the deal activity to be as busy as it ended up being, and so they need more junior people. And also, a lot of junior people have been quitting because there's been so much work and like and working from home, kind of just really burned people out. And so that just exacerbated the problem. And so that's why all these banks are raising their compensation across the board. And like right now, it's just like everyone just needs more people. So yeah, it's definitely possible that that's happening. I don't know if that's going to last though. So that's the only thing. Other question is how competitive are these programs to get into? Oh, okay. So this is a continuation of your previous statement. Sorry, it came in as 2 different statements. So these programs, how competitive are these programs to get into compared to summer junior internships, and how hard are they to get into if you never interned at their firm before? So if this is what I think it is, which again, I'm assuming you're talking about like just full-time positions for recent grads that have already been out of school for a few months. How competitive are these programs? Honestly, I don't have statistics on that. So I don't want to, tell you the wrong thing. But what I will say is typically full-time recruiting is going to be harder than summer internship recruiting because most of the full-time offers have already been given to the summer interns, right? Meaning for every like 10 summer internship offers, maybe like 8 or 9 of those people will come back for full-time. And then those last 1 or 2 spots is what goes to like the full-time recruiting cycle, right? So in terms of like the number of jobs available, because the summer interns already got first dibs, there's not going to be as many jobs available, right? So from that standpoint, it's going to be harder. Now, for these programs, since if it's for people that are already a few months out of school, that might make it actually easier because my guess is like a lot of people, by the time they're a few months out of school, if they haven't gotten into banking at that point, they've probably already given up on it, right? So that might actually, dilute the competition a little bit or make it, like there's less people in there, right? But in terms of how hard is it to get in if you never interned at the firm before, I mean, I'm guessing most of the people that apply for these opportunities didn't intern at their firm before. So it's not a matter of like whether you intern at their firm specifically, but I think it does matter like what kind of relevant experience do you have prior to applying, right? Like what's on your resume right now? If you've worked at a different investment bank, that's great. I'm sure they will love that, right? But if you have like no finance experience whatsoever, then you're probably not going to be as competitive, right? So hopefully that answers your question. Nicholas asks, I already got a summer 2022 internship, but we'll be doing a part-time internship in DC in the spring. Before my end goal is equity research. Do you have any places to target? I mean, in terms of equity research, are you asking about like a place to target for the spring internship, meaning you're still looking for it, or I'm not sure I quite understand because it sounds like you already got the spring internship. So are you saying like where should you target for full time? Um, yeah, I'm not sure, Nicholas. Like, if you want to clarify your question, I'm happy to dive into it. But I would say, like, if your goal is equity research, the firms that I would be targeting if I want to break into that field is kind of all the same firms that I would be targeting if I want to break into investment banking. Right? It's all the bulge bracket firms, the elite boutiques. Oh, you're looking for the spring internship currently. Okay. If you're looking for spring internships, then honestly, I'm not sure for equity research because, like, for equity research, right? Like, that's not. There's a lot of small investment banks out there, right? That do investment banking, but like as far as equity research goes, like you typically need more scale to have an equity research division because if you're like some small no-name firm and you have an equity research division, like no one's going to read your research reports, right? So it's just like doesn't make sense. And then also like the reason why equity research works, like the way they like kind of really monetize that business is like it's really to help the investment banks who help the investment banking division part of the business take these companies public, right? Because if you're going to take your client public, like that client's going to want equity research coverage after they go public. And so like smaller banks just don't have that like IPO book of business or whatever. So there's like no synergies there, right? Now the challenge is like if you want to find like a spring internship, um, most of these bigger banks, I don't think they usually offer these off-cycle internships. Like most of their internships are during the summer, right? So I think it might be kind of difficult. I don't know what your summer 2022 internship is, like if that's in banking or if that's already in equity research or if that's in something else. But I would say like I don't know, maybe look at some of the middle market or lower middle market banks. Um, because some of those like smaller middle market banks, they still have an equity research department and they're usually like not the book runner on these IPO deals, but they're co-managers. Um, and maybe they're a little more lax about or a little bit less rigid about the recruiting process. Um, okay, so your summer 2022 internship is at BAML. And is that in like the banking division or equity research? Because I think that if you are already doing equity research at BAML for summer 2022, then like you don't really have to worry about getting more equity research experience. Like just do a good job during your summer internship, and then that'll convert into a full-time offer in equity research. But that like I don't know. Like I know it's like quant market risk. Okay, so not in equity research. So that's probably why you're trying to get more experience, right? So honestly, so that's what I would do. I would like look at some of the smaller banks, smaller like lower middle market banks, right? You can also like um, set up like job alerts on like the major job sites like Google Jobs, LinkedIn, Indeed, Glassdoor, so on and so forth, and just like set alert for equity research. So anytime there's like an equity research opportunity, they'll like send it to you. Right, that's another thing you could do. Otherwise, I would say like if you can't find anything in equity research, then you can also just do something else that's like relevant to equity research, right? Like if you did like an investment banking internship part-time during the spring, which is like a lot easier to get, or like not a lot easier to get, but like there's a lot more of those, that's still highly relevant on your resume, right? And then like there's other things you can do, like probably in school, like you join a student run investment fund, there's a lot of those. I don't know what school you go to. That's a highly relevant experience for equity research, right? Because you're constantly doing stock pitches and things like that, right? So that would be my advice to you, Nicholas. Hopefully that helps. Matthew asks, Can I ask a question? Yeah, you don't have to ask for permission. Feel free to ask a question. We're doing AMA, so you guys can ask whatever questions you have about investment banking recruiting, about our program, about our new money back guarantee, which again, for those of you who are joining late, if you work with us here at Wall Street Mastermind and you don't end up getting an offer, we'll actually give you your money back, which is amazing, in my opinion anyway, but no one else is offering this out there. So, we're removing the risk completely and we're taking all the risk by working with you. And so, if you guys want to know more about that, feel free to ask me. But yeah, Matthew, ask whatever questions you have, man. Nicholas says, thanks for the advice. No problem. Happy to help. Does anyone else have any other questions while I'm waiting on Nicholas's questions? Otherwise, we do have about 3 to 4 minutes here. So I'll stay on for a little bit while longer. But while we're waiting for that, again, guys, I would encourage you guys to go check out our offer. Go check out our website, www.wallstreetmastermind.com. The street's abbreviated to ST, so it's wallstmastermind.com. Again, we've worked with all types of students. You do not have to be some super qualified student to qualify for our money back guarantee. Okay, we love working with qualified students, don't get me wrong. We've also helped a lot of Ivy League school kids and students with 4.0 GPAs and all that, but we've helped people get in with as low as a 2.86 actually. That was like a very, very rare exception as an outlier, but like I would say anywhere between 3.0 to 4.0, we've worked with students like that. Like I would say, over, like most of the time in banking, you want to have at least a 3.7 GPA or above, right? Like in order to be competitive. When we looked at the data, like 41% of our students who got offers successfully had lower than a 3.7. So that's like almost half, right? 21% of those people actually had GPAs lower than a 3.5. So that means they're in the lower half of the threes, right? 7% of them actually had GPAs lower than 3.3. So it's like, my point is, you just never know. Like whatever self-limiting beliefs you might have right now, or whatever other people have told you about your chances of breaking in. Like I see these posts on Wall Street Oasis all the time where people say like, oh, there's no way you can get in if you're XYZ. There's no way you can get in if you're non-target, or if you're this or that, or if your GPA is this. Like, don't listen to that. Tune that out. It's all like just mental trash. You got to take it out and dump it. Right? We've even had clients whose family told them that they can't get into banking. Like his sister works in banking and told him that, yeah, you're probably not going to get in. And then he worked with us and he got in. Right? So like, be very careful about like who you listen to and who you get advice from. Right? All right. So a couple more questions came in. Let me try to tackle these in the last few minutes here. Nicholas asks, I know it's not a recruiting question, but I'm a little bit confused on the difference between the product group and the industry group within the investment banking division. Yeah, so this is really easy to explain. If you're in an industry group, that means that you specialize in covering companies in a certain industry. So if you're a technology investment banker, you only cover technology companies, right? If you're a consumer banker, you only cover consumer companies. If you're an oil and gas banker, you only cover oil and gas companies. So like you become a specialist on that industry, and then you develop like a lot of industry knowledge about that space and all the players in it and the competitive landscape and all that, right? And so a lot of times like you're responsible for managing that relationship, right? Product bankers are like, okay, you work in the M&A group, or you work in leverage finance, or you work in equity capital markets or debt capital markets. You only work on one specific product. Like I only work on M&A deals if I'm in the M&A group, but I will work on M&A deals across all the different verticals. I'll do tech M&A deals, consumer M&A deals, oil and gas M&A deals, whatever, right? So it's just like, do you want to specialize vertically, or do you want to specialize horizontally, right? That's pretty much the difference. So hopefully that helps. The other, and I guess your follow-up was, if someone works in the M&A field within the product group, do they assist on M&A deals within all industries and investment division? Yep, I think I pretty much just answered that before I even saw that. So yes, the answer is yes. For example, if there's an M&A deal in the healthcare industry and someone part of the product sector assists with that deal, how do their responsibilities differ from the IB analysts in the healthcare industry sector? Yeah, so typically like the different teams will work together, right? So if you're on the M&A team and then like someone else is on the healthcare team, the two teams will come together and work on the deal together. Like the healthcare team is usually going to be the team that like pitches the company and manages the relationship and does a lot of the business development, gives them a lot of free advice on an ongoing basis to like build that relationship. And then like when they win the deal and there's a live M&A transaction, then they'll bring their M&A counterparts in and then kind of like work on a deal together. And then like the M&A team typically is the one that like runs. They're like the ones like QB, like that quarterback the transaction, right? Like they own the model and whatever. And so it's almost like that's why a lot of people prefer to be in like the product groups or the M&A groups. Is almost like they just come in when there's actually like a live deal to do instead of like having to do all the grunt work up front, right? But that's not like always the case at every bank. Like every bank structures it differently. Like so, for example, when I was in the technology group at Morgan Stanley, and also the even when I was in the technology group at Deutsche Bank, like we didn't outsource our M&A deals to the M&A group. Like we did our own tech deals, right? So, like, I guess we were lucky, and part of that is probably because we were in the Bay Area office, and so like we don't just like punt our deal to the M&A team in the New York office. Whereas like if you are in an industry group in New York, you might get your deals, you might get your live deals punted to the product groups, right? So it just depends case by case, right? You really have to like do your due diligence up front, figure out like how it actually works at any of these given banks. Okay. All right. So other than that, I think that's pretty much it in terms of the legitimate questions anyway. Matthew has a funny question, but I'm not going to put it on the screen. And Matthew, I would definitely rather work on Wall Street to answer your question. But okay, I think those are all the questions. Oh, no, Nicholas has one more question. Also, really quick, when would you do a company comparable analysis over a precedent transaction and vice versa? Is comp analysis best suited for a sell-side client trying to figure out how much they should value a minority stake in their company, whereas you will use precedent transactions for a majority stake instead? Hope that makes sense. No, I wouldn't say it has anything to do with like majority or minority. I would say that typically you use comps and precedent transactions side by side in most instances. Like valuation is not a perfect science, it's more of an art, right? Meaning like no single valuation methodology is perfect and there's pros and cons. So that's why you use 2 or 3 different valuation methodologies, including trading comps and precedents and DCFs, to then triangulate like the right valuation range. Okay, so that's how I would answer that question. Hopefully that makes sense. All right. Anyway, guys, we're out of time. So again, thank you guys for tuning in. Again, if you guys are interested in our new money back guarantee with our offer, if you want help breaking into investment banking, if you want just that peace of mind that if you put in all the hard work, it's going to pay off. Like we have an over 90% success rate, like I said, right? So if you want that type of results for yourself with something as important as your career, which is really going to affect you, not just for like the first 1 or 2 years out of school, but for the rest of your life, right? It's going to really like change your career trajectory. Like we want to take it from a flatter trajectory to like a more elevated one, right? Like we want to make the slope steeper, right? So if that's what you want, and you're willing to invest in yourself and you're willing to actually do the work, and I encourage you guys to reach out to us. You can go to www.wallstreetmastermind.com/apply to speak with us so that we can learn more about you and your situation. And then based on that, we can come up with a customized game plan for you, and we'll walk you through exactly how that will work. And then, like I said, if you work with us, you do the work, and you still don't end up getting the offer, we'll give you your money back. Okay, that's our promise to you. So anyway, thank you guys for tuning in. We'll be back again for the same Q&A next month, and that'll be it. All right, talk soon. Bye.